record-breaking year of home prices.
And it's going to cause a massive negative
heading
The U.S. experienced a major housing bubble.
economy.
Hey, what's up? My name's Ryan. I own some real estate. I worked for a real estate guru for 2 years who owns $4 billion of real estate. So I know a little bit about real estate. The bubble, it's done. It bursted, right? The biggest reason why the real estate market for the past 2 years went up 44% in just 2 years. That's 22% per year. That outpaces any stock market, that outpaces any ETF, that outpaces everything that has had value. Real estate was the #1 investment to make over the past 2 years. That is clearly unsustainable, and that is quickly going in reverse as we speak. So in August 2022, home prices fell 6%. So what does that mean? That 44% is quickly in decline. There's a rapid acceleration of the deceleration of the housing market. So it started with 6% right there. In August, 62,000 home contracts, purchase and sales agreements were canceled. So what does that mean? They were either in the due diligence period, the inspection period, and the buyers walked away. Something either happened, they're saying, hey, interest rates don't make sense anymore. It's too high, my monthly payment's too high. They found something on the house they don't like. What I think is happening, they're just seeing the overall trajectory of the market and they're saying, hey, I don't wanna buy a house right now. I'm sure there's gonna be a better deal a year, 2 years down the line. So 62,000 purchases that were supposed to go through didn't go through and were canceled in the month of August. So sales price was down 6% and 62,000 contracts were canceled. Not a good sign. The biggest factor that led to the 44% increase in sales price year over year was the fact that there was just zero supply of homes on the market. Now, supply is quickly approaching the 4 to 5 month level nationwide. During the pandemic, we were at like about half to 1 to 1.5 months of inventory. So that's why demand was through the roof. Now there's a lot more supply on the roof, which is going to drive demand down, further bursting the housing bubble. The next reason is interest rates, right? The Fed is nonstop raising interest rates. They are determined to bring inflation back to 2%, just like Jay Powell said. He's gonna keep his foot on the gas, and we don't know what's gonna break the back. Is it 5.5%, 6.25% on 30-year mortgages that's gonna drive someone away from buying that new house? Probably, right? You're talking about a $1,000 to $2,000 difference on like a $500,000 home on your mortgage payment. So if you were originally paying $2,200 for a $400,000 loan, you're now paying $3,000, $3,200, $3,500. So that's gonna deteriorate the market of people wanting to buy a home. They're probably gonna rent, or they're probably just gonna stay where they are for the next 1 to 2 years and just bite the bullet because we're not in the best buyer's market. Prices are still inflated and interest rates are going up. So payments are going up and prices of houses aren't going down. So we're in this weird period. And this brings me to my next point is buyers expect deals and sellers are still looking at comps from 6 months ago of their neighbors selling $100,000 over asking price. Sellers are still living in this la-la land like they can get whatever they want, where buyers are seeing prices and interest rates go up and they want and expect deals. And sellers are just not willing to give the deals right now. So like I said, we're in this weird stagnant place where buyers want the deals, sellers aren't giving the reduction in price, and stuff isn't really moving. And that is the prime example of what causes the real estate market to fall. At some point, homes are going to come down in value. According to the wealth effect, the value of your home for the average American is everything. It's more than stocks getting cut in half. It's more than you getting a pay raise. The value of your home significantly reduces the wealth effect. So for example, let's say someone has almost all of their net worth in their home. I know people who live like this. They put all their money and all their net worth into their home. It's worth $1 million, $1.5 million, and that house just got reduced by 30%. Your net worth went from $1.5 million to $1 million. That's a huge effect in purchasing power and, like I said, the wealth effect for the average everyday American, and they're gonna feel that really, really, really tough. Overall, the housing market will come down this year and next year. It's going to drag the stock market lower. It's going to probably cause the economy to go into a recession. So the housing market is going lower. Now, if you wanna know what I'm doing to invest in times like these, go watch this video right here where I share with you my exact strategies in the stock market today.